Let's get started. Welcome and thank you for joining us today for our presentation on remote workers and their impact on your business and employee. I'm Carolyn Powell, Business Development Director here at Tronconi Seguir & Associates, and I'll be your host today. Many companies are considering or already have a remote work policy. So what happens when your remote workers move to another state? What happens when your top candidate for a remote position is from Ohio, or when a key employee now decides they want to winter in Florida? Doing your homework and talking to key experts is very important. That's why you're here today. Every situation differs, so today we'll give you some general information to get you started, and we're happy to set up a call to talk further about your specific situation and concerns. Quick housekeeping. Feel free to type any of your questions in the question box in the sidebar during the presentation. We'll leave time at the end to get those questions answered for you. You'll also find a copy of today's presentation in the handout section in that same sidebar if you want to open it, print it, or just take a look at it during the presentation. Later today, we'll also send you a copy of the presentation and a link to the recorded version if you'd like to view it again or share it with a colleague. So without further ado, let's get started. Tronconi Seguir & Associates is a certified public accounting and business consulting firm. They provide accounting, auditing, tax, and specialized consulting services based on their clients' needs and to help them achieve their goals. Tom Mazurek is a CPA and partner at the firm and has over 20 years of public accounting experience. He has expertise in state and local tax, sales and use tax, and nexus reviews. The companies that he works with are in a wide range of industries and sizes. Michelle Loretto is a CPA and manager on our small business team. She has been in public accounting for over 20 years and works with small and mid-sized privately held businesses specializing in manufacturing. ESC is an outsourced HR firm, professional employer organization, and business services firm. They provide specialties in all areas of HR, compliance, employee benefits, and payroll. So a company has experience on all the benefits and efficiencies of a Fortune 500 HR department at a fraction of the cost. Cindy Lawrence is a certified senior human resources professional dedicated to supporting business objectives through effective and collaborative human resource solutions. She has over 25 years experience in HR and works with companies in all industries. And Lauren Kerson has over 12 years of experience of HR, recruiting, and employee relations. She helps business owners and managers with HR compliance and best practices so they can focus on other aspects of their business. Cindy and Lauren, do you want to get us started today?
Absolutely.
Good morning, everyone. Thanks for joining us.
So this morning, Cindy and I are going to be talking about the HR best practice and compliance considerations for remote workers. We understand that you are probably attending this webinar because you either have or are considering having remote workers in your workforce, whether it be a fully remote workforce, hiring some people from out of state, which we'll be talking about a lot in a little bit, or having some people just work sporadically from home. In the post-COVID, if you can call it that, world, there has been a lot of talk about a remote workforce, and employees seem to be expecting that more and more as we are seeing employees really reevaluate what's important to them and what they really feel that work should be. This is a really hot topic that we've been working with our clients with at ESC, and something that we're talking about every day. So we're happy to share some best practices with you, as well as some compliance things that companies really need to think about as they are continuing to hire remote workers or considering even having in-office workers switch to being remote, whether that be on a full-time or part-time basis. So just some statistics to really get you thinking about why employees are looking to work remotely and how important and how significant that really is in today's world. 74% of workers saying that if they had remote work opportunities at their jobs, that they would be less likely to look for another job, which is significant. We're seeing many employers really struggle with turnover rates that are higher than normal and struggling to hire employees. So offering some type of remote work capabilities can really be beneficial from a retention standpoint as well as from a recruiting standpoint as well. And over half of workers would be willing to just leave their current job and take a new position if it offered more remote work as well as flexibility in their schedule. So those are the things that we're really seeing employees look for across all industries. We work with so many different industries, and there's really not a whole lot of exceptions. This is for salaried exempt workers and non-exempt workers alike that are really looking for a new type of work in their lives. And workers are saying that they save over, on average, 75 hours per year in avoided commute time. And this is something to keep in the back of your mind as well, because many of those workers say, I would rather continue working remotely instead of spending an hour or two of my day in the car. I would rather be home, and you could actually be giving back even half of that to their jobs. You might actually be getting more productivity and more work from your employees, which is sometimes the opposite of what hesitant managers and leaders might think of. I'm not really sure if this is going to work for us. I'm not sure if people are going to be working as hard or as fast or as efficiently, but they actually have more time at home, and they might be willing to contribute that to you if they're not spending it in their cars. So there's a lot of considerations to make when you are considering having some or all of your workforce work remotely. I know when we were in March of 2020, many of us were forced to just have people work from home with very little notice, and things were a little bit different where we were really giving all each other, we were all in the same boat together. You know, people were working from weird places in their house with their families around, and all of that was fine then, but times are a little bit different now. We've had some time to really evaluate how can we do this professionally and effectively, and if this is going to be sustainable long term, we really want to make sure that we have the right things in place to be able to do that. So one of the first things that you need to consider, and we can really talk about this for over an hour because there's so many things to consider, but just some things to start thinking about before we get into the compliance situations, but is the technology. Do employers need to ensure that, you know, not only their employees are having the correct physical hardware, do they have the right phone capabilities and the computer and the dual monitors or whatever they need to do their jobs effectively, but also from an IT security standpoint, you really want to make sure that you're putting some policies and procedures in place to make sure that people are having secure Wi-Fi, to making sure that they have fast enough Wi-Fi, that if you need them on a video call, that their Wi-Fi can actually handle that, to make sure that they have security in their homes, that they don't have 6 roommates and they're doing their work on their kitchen table where, you know, their other roommates might be using their laptop to play video games on. You know, those things, you know, we assume no one would be doing, but it's really important to ensure from to protect your company, to make sure that your company proprietary information is safeguarded in all of those ways. Time zones. If you are looking to hire people that are in different parts of the country, you really want to think about how that will work with the time zones and how your communication will be. Lots of things to consider there, and what the employees' expectations are of that too, if you're in the interview process. Communication methods. Do you currently have remote employees? And if you have a mix of remote employees and in-person employees, sometimes we get feedback that that's more difficult because you're having in-person conversations with the people that you might be physically seeing every day. And it's really important to make sure that the people who aren't physically there are not feeling left out or not part of the team because they might not be in those impromptu water cooler meetings per se. So are you using Teams or another type of chat to make sure that people still feel connected to the employees, and making sure that they have a chance to connect with each other just like you would. Are you using video calls? How often are you checking in with your employees? You really want to make sure that they are feeling just as part of the team as everyone else who might be in the office, if you're considering hiring some people and having some people remote and some people in the office still. How do you hold people accountable? It's one of the most common questions I get from my clients about whether when they're having people working remotely. I'm working with a client now who is a little bit hesitant to remote work, but unfortunately, due to some positive COVID cases, they're needing to make some changes very quickly in their workplace. And they're very concerned about having to hold people accountable. And the best advice that I give my clients is to really make sure that those expectations are set ahead of time, and to really think about what type of objectives and goals are you looking for that employee to meet so that you can evaluate their productivity. And in some jobs, that's really easy. And in some jobs, that can be a little bit more difficult. So leaders really need to go by sometimes a gut feeling. You know, if you call your employee, are they never answering? Are they always calling you back 15 minutes later? Are they calling you and it sounds like they're at the grocery store? You know, those types of things, and having open and honest communication with them about how their work is going, and really looking at their output at the end of the day. Many leaders are, who have been leading in-person teams for many, many years, feel comfortable knowing, okay, I could see my team, I could see they're working, I could see they're on the phone, I could see they're at their desk and they're not texting on their phones or chatting to their coworkers. And really, remote work is a true culture shift. And thinking to yourself, do I want to make my employees who are remote feel like they can't leave their chair? I was talking to someone recently who worked someplace previous to their current job where they felt like they were working remote, but they felt like they were being watched every second of the day. And if their keystrokes stopped, that they would be disciplined for it, which was very stressful for them. So it's finding the balance between giving your employees a little bit of trust and autonomy while still being able to hold them accountable for what they're working and producing during the day as well. So all of those things really need to be thought about ahead of time so that there's no surprises when this change happens or when this person is hired, wherever you are in that process. And your company culture needs to be even stronger if you want to maintain that while having a significant part of your workforce working remotely. Some company culture pre-remote work might have been things like buying lunch for the team, or all going out to happy hour on a Thursday night with your team, and doing those things in person when you're laughing together and you're making jokes and those types of things, which is great to have in a work culture in the office. But when you have people that aren't physically with you all the time, and it might be spread out over different parts of the country even, you want to think about, what does your company culture really mean as far as what your communication is, how you treat your employees. Do your leaders all have a really good idea of what your company culture is, and do they portray that to their teams? What happens when you have an employee who is experiencing a difficult time, or especially where we're still not truly post-COVID, or has a difficult situation, or has a family situation or a personal health situation? How are you treating your employees? How are you communicating with them? How do you handle mistakes? Those types of things. How do you reward your employees, recognize them? I get a lot of feedback from some employees who work remotely at some of my clients, and this was a lot during when we were quarantined last year. But they say, the only time I ever really hear from my manager is if they call me, it's probably because they have to give me some negative feedback. Are we doing those check-ins, just like you would maybe check in with the person sitting next to you and say, hey, Cindy, how you doing? How's your weekend? Because she happens to be there. If I'm not seeing Cindy, if Cindy lives across the country from me, am I still giving her a call every now and then and saying, hey, how are you? What's going on in your life? How are things? And having that call only for that purpose, to make people feel that they're still valued as a person and not just someone who's sitting behind their computer screen producing, and they're just a number. So that's really, really important to think about. How are you going to continue or even strengthen your company culture, and what things need to change to make sure your remote employees feel that culture just as much as your in-person employees did or do as well. And then leadership responsibilities are extremely important to make sure that your leaders have training on how to do all of this and that their expectations are made clear to them so that they have the tools to really hold their people accountable and lead effectively if their workforce is all or partly remote. So just some best practices to consider before we go into the compliance considerations, which are so many things to think about. One is to think about gaining input from current employees. So if you're looking to make a change in your remote workforce, whether it be adding more remote workers or having some in-person workers work remotely, either all of the time or part of the time, is gaining some of their input. Employees, especially these days, are looking for some input and some buy-in and some decision-making into what their jobs look like. And you're more likely to have an effective outcome if you get their opinions from the start, rather than just assuming what your employees might want, because truly it might be different than what you are assuming it is, or than what you might think it is, based on maybe what you would prefer personally. Setting those expectations. If you're hiring remote workers, it's really important to include some questions in your interview process about what that remote work arrangement looks like, how they would be able to balance their time and remain productive, and what their communication expectations look like. So changing your interview structure a little bit is important. And then current employees as well, making sure that you're setting the expectations of how their jobs might be a little bit different than they would if they're in the office. And then something else to consider too, if you don't already have one, is to have a robust policy and an employee agreement for people to really commit to following those expectations about the things that we talked about earlier, about IT security, things like professionalism. You want to make sure that they know who's eligible. Can you work remotely if you are local here but you're a new hire, or do we want you in the office for your first 2 weeks or 90 days? What if you're an employee on disciplinary action? Are you going to pull back that remote work privilege? For our local, at least, of course. How should they be communicating to you? How often do you want to hear from them? Do you expect that they're available during business hours, or are you okay if they just get their work done, even if it's at 3 o'clock in the morning? Those things need to be established beforehand and really be clear and in writing to help protect you and to help promote the best remote work relationship as possible. You also want to cover what your professionalism expectations are. If you have remote workers working with clients or even having company meetings and things like that, do you really prefer that people are on camera all the time? Do you prefer that they are using that video chat as opposed to email? Do you need to put that, perhaps you should make sure that you are still dressed professionally when you're on camera, so that you're not having your employees come to work in their pajamas, even though they're remote. If those are the things that matter to you, it's really important to put those in your policy. And then again, security, which is an entirely larger topic, but those things that you really need to make sure are established ahead of time. It's so much easier to do that ahead of time and to move slower into this transition than to get yourself into a situation where you've not set those expectations and you have to pull back a little bit. So strongly recommend doing that, doing it the right way. And this is something that we're really working with our clients with on a daily basis. And it really depends on what your culture is and what your goals are as well. So Cindy's going to talk about some labor law things to consider when you are hiring or continuing to have remote employees. Cindy?
Thanks, Lauren. That was great information about how remote workers can be integrated into your current business structure. And I want to make sure that there's a clear understanding of the compliance piece of that when we're talking about remote workers that are outside of New York State. There are a patchwork of minimum wage requirements based on the state and even within a state based on geographic area. New York State is one of those states that has different minimum hourly pay rate for non-exempt employees based on the area that the business, the area of the state that the business is located in. Likewise, when you have salaried exempt employees, there are minimum salary state thresholds in some areas that you need to be aware of. So not only do you need to ensure that you are paying on a salary basis and that position meets the duties tests, you also have to ensure that the salary amount meets that state threshold. And many states do only follow the federal requirement, but there are a number of states that have their own thresholds, as well as their own exemption requirements for people to be classified as salaried exempt and paid on a salary basis. So if you're looking at remote workers outside of New York State, you need to be aware of what those thresholds or hourly minimum rates are. Likewise, for non-exempt hourly people, you need to be aware of the state overtime requirements. Many states do look at overtime is any hours worked over 40 in a work week. But there are some states, like California, that base their overtime on 8 hours worked in a day. So any hours over 8 in a day qualify for OT rates, even if the total weekly rate is still at 40 hours or amount is still at 40 hours. And there are also some states that require extra pay, either OT at 1.5 times the regular rate or double time for Sundays or a 7th day of work in a week. So if you've got remote workers outside of New York, you need to make sure you understand what those pay requirements are. Some states have mandatory extra pay required if there are split shifts or there's a spread of hours that span over a certain number of hours. These can vary. They're not all the same if they're in place. They can vary by state. So again, it's very important for you to understand so you are in compliance with the pay specifics for your hourly employees. Also, frequency of pay requirements. Some states require that manual laborers are paid every week. You're not allowed to pay them on a biweekly or a semi-monthly basis. Some states allow semi-monthly payment. Some states require nothing but a monthly salary. So you need to understand what the frequency of pay requirements are in the states that you're going to have remote workers in. The same with meal and rest break requirements. Those of us in New York State are very familiar with New York's meal period requirements. Some states have no paid meal requirements. So it's really important to understand if there's something other than what you're used to in a state where you have remote workers. Pay stub requirements also can vary by state. Some states have absolutely no requirement for an earnings statement tied to a paycheck. Some states have a requirement that employees merely have access to some type of electronic statement. Some states actually have what's called an access in print requirement. So you have to be able to allow the employee to print out that electronic statement if they want it. And some states require opt-in or opt-out of electronic statements. So it's important to understand what you need to give employees to document the pay that you're giving them on a payday. Advance notice of pay change requirements. We're familiar with the WTPA forms in New York State when we hire someone or we are going to make a pay change that decreases their rate of pay or changes their frequency of pay or their pay day. Some other states have that same type of requirement for advance notice. So you want to make sure you're aware of and adhering to those. And predictive scheduling requirements are in place in 6 states or cities across the U.S. So if you are in California or Illinois or New York City, Oregon, Philadelphia, or Washington State, you need to give people a regular schedule ahead of time so they know what hours they're expected to work. So just be aware, generally these apply to and are effective for hourly people, so you can't be changing your schedule on a regular basis. And business expense reimbursement requirements vary from state to state as well. California and New York State are among the strictest that explicitly require employers to reimburse employees for all work-related expenses. Some follow the federal requirement that only requires a business expense reimbursement if that expenditure would bring the employee below minimum wage. Something to look at if you have remote hourly workers and they have expenses that they are covering themselves to be able to work for you remotely. A lot of pay variations from state to state, a lot of things to pay attention to. Also, when you are getting ready to hire someone, there are certain things you need to be aware of in the interview process. Background check restrictions can change from state to state. There has been kind of a movement towards this ban the box requirement in interviewing and job application processes in the last few years. Basically, you are not able to inquire about, take any action on any type of a criminal conviction unless it is relevant to the job that you are hiring someone for. So no adverse action can be taken on past convictions if it's not relative to this exact position that you're hiring for. And there are FCI notices that need to be given to an employee. These are the Fair Credit Reporting Agents Act requirements that if you're going to take action on any type of a consumer report that you pull, you need to give this notice to a candidate ahead of time and get their permission to do so. And in New York State, there's also the corrections law that you need to follow, making sure Article 23E, that you are supplying them with a copy of any information that you get that may adversely impact your decision to hire. You also are not allowed to make any salary inquiries during the interview process. 25 states actually limit the fact that you are not able to make a decision to hire someone or ask them about their previous salary when you are going through the interview process. You need to be aware of those so you are not kind of getting yourself on the wrong side of someone being able to say, well, you didn't hire me or you offered me a lower wage because you knew I made X previously. So that's become very important from a non-discrimination standpoint in the last few period of time, months and years. There are also states that have permissibility and enforceability statutes or prohibitions against restrictive covenants or any kind of non-compete or confidentiality agreements. You are able, of course, to protect your own business proprietary information, but keeping someone from being able to get some other type of employment after they leave you or not work in the same industry after they leave you is being restricted more and more lately, especially for lower paying jobs or hourly positions. This has really become something that a lot of states are looking at, so we want to make sure you're aware of that. Arbitration agreements, especially when they have to do with harassment complaints, and arbitrating your way out of those types of complaints, really becoming tough to enforce these days. Many different states have different requirements of how and when you notify someone after they leave you. You need to, in 14 states, give employees a specific state form, or they have prescribed information that you have to give the employee if they leave you. Things like what was the reason, how to collect unemployment or apply for unemployment. So those are really something you need to pay attention if you're starting to move into states other than New York. And final pay requirements are another big variation between states. Some states say that you can pay final pay in the next normally scheduled pay date. Some, based on the reason, whether it's voluntary or involuntary, may require a pay on the last day of work. So you really need to pay attention to some of those. And there are employee administration considerations that are state specific that you need to be aware of. I know that Michelle and Tom are going to cover workers' compensation insurance and unemployment compensation laws and administration. Those are really important for you to be aware of and do the right way, because the penalties can be significant if you're not adhering to them, you're not setting up the proper accounts or coverage in states other than New York, assuming that you're in New York right now. Health insurance coverage out of area is something that you need to be aware of as well. Emergency treatment is always going to be covered for most plans that are written in New York if someone is out of area and has an emergency. But what about regular coverage? What about an HMO or PPO plan? You're going to want to talk to your broker to see if your current offerings will cover someone out of area, or whether you need to get either riders or different policies to cover them. And handbook requirements vary greatly from state to state. Many states have very specific policies for very specific areas. You want to make sure that you're including the required policies for each state you're in a manual or an addendum to your existing manual. And harassment training requirements for employees and or supervisors vary from state to state. Some states require separate training for supervisors. Some just require general training for employees and supervisors to receive the same information and training. Some states have certain time element requirements for supervisory training, so you really want to make sure that your training that you're providing meets what's required out of New York State. And if someone is working outside of your time zone, what hours are they expected to be available to you? And another very important point of this for your non-exempt employees is you need to ensure that they are clocking in and recording all time they work. While we all acknowledge the flexibility of working remotely is a beneficial thing for both the employee and the employer, it's really important for time records to be correct and to be kept for your non-exempt hourly employees. You want to make sure that they know that you do not expect them to work outside of working hours. That's not your expectation, and if they do, those hours need to be reported to you so you can pay them correctly and accurately. And lastly, I want to cover the paid leave requirements that are state specific, because this is very, very significant. This is where you're going to see a lot of differentials between states. Some states have a paid sick, or what they call a sick and safe leave. Some have none, so you're going to want to know what states have that requirement to give people sick leave or leave to take care of the safe leave, really, especially in New York, and I think it's pretty consistent across states if they refer to it this way, is for any type of a domestic abuse situation, for shelter, to get assistance, to testify in court. So be aware if there are those requirements in the states that you have employees in. Some states have a paid family leave in place for either taking care of an ill family member or to bond with a newborn child or a newly adopted child. So you're going to want to be aware if those are in place. Some states require these through an insurance program, such as New York does, attached to the disability benefits that's statutory. Some states have a statutory paid disability leave requirement and some do not. So if there's a state that does not have a statutory paid disability leave requirement, are you going to offer some other type of voluntary disability leave so employees have some type of coverage if they become ill themselves? Many states have enacted COVID-19 paid sick leave for someone who is ill themselves with COVID or needs to take care of a sick family member who has COVID, or even is directed to isolate or quarantine based on exposure. So you need to be aware of that, as well as COVID-19 paid leaves for vaccinations or recovery from an adverse effect of a vaccination. Domestic violence victims leave can sometimes, in states that have a sick and safe leave, be paid. Many states that don't have a sick and safe leave requirement do specifically spell out an unpaid domestic violence victims leave. So you're going to want to be aware of that. And jury duty leave and voting leave can vary greatly from state to state as well. So you're going to want to be aware of what those are in any states you're operating in. So there's a lot that we need to be aware of. It's not just business as usual in a state outside of where you're normally operating out of or where your main business operation is. You really do need to be aware of what states you have employees in, and it's the employer's responsibility to know where the employee is working. So you want to make sure to put that requirement in any kind of a arrangement, agreement, any kind of a remote work policy that you have, so that an employee is moving that you may not be aware of doesn't get you into trouble from a state requirement. And we'll let Michelle and Tom move on and give us the best practice advice for taxes and compliance.
Thank you, Cindy, Lauren, for your thoughts there on the HR stuff, the HR issues with remote workers. There's really a lot to consider just from the labor and the employee perspective. And now Michelle and I are going to throw the tax side in. It's really an interesting time where we have that intersection between HR and finance. You know, we really have to be on the same page and talking to each other to ensure that these issues are being handled correctly. Can't be done in a vacuum. So let's get started here on the next slide. So what are some of the tax implications that we're talking about for remote workers? This impacts not only the employer, but also the employees as well. The biggest issues really is that physical presence of the employee in another state generally will create nexus for the employer, for the business, for income tax purposes and for sales and use tax purposes. Now you might be saying, Tom, nexus, you know, I just have a person working there. For income tax, I should be good. Well, typically you would be good if all that person was doing was soliciting sales of tangible personal property. You may have Public Law 86-272 protection for that person from any income tax. However, when you go beyond the mere solicitation of sales, and that person is actually performing a job, performing services on your behalf, that is going to create this income tax liability. And back in 2012, this was an issue that New Jersey took to court with a company called Telebrite. Telebrite had one employee telecommuting in New Jersey, and that was sufficient to create income tax nexus for Telebrite for the corporation business income tax in New Jersey. So states are on this issue. And then for sales and use tax purposes, again, Tom, Wayfair, economic nexus, if I have certain sales in a state, then yeah, I have to collect, but other than that, I should be good. No, you've got to remember physical presence is still there. The physical presence nexus still trumps everything. So having an employee in that state can create these two issues for you from income tax and a sales and use tax nexus perspective. What does this do? This creates additional filing requirements. You may have to register in these states. If it's sales tax, you may have to determine then if your products are subject to tax and then start collecting tax on those products in that state. So this creates a lot of issues. And from the employee there, you're looking at new payroll withholding, unemployment issues. If the employer doesn't get this correct and withholds income tax if they're required to, you have penalties you may face. Not only that, but you're not just talking tax, you're dealing with the Department of Labor now for potential unemployment insurance issues. Disability, workers' comp, there's way more going on now for this business in multiple states. And then for the employees, again, they have issues too. You're talking, multiple income tax returns possibly. You have to file your resident state return and then potentially non-resident states for other states where you're working. You may be required to withhold income tax. If the state doesn't have a reciprocal agreement with the state that you're working in now, then you're going to have a potential issue with that. And it could affect the amount of tax that person is paying. You're shifting to a more high or lower income tax state than the state you were currently working in before. So this is something, this issue has been around. Congress is aware of this issue, and they have been working on mobile workforce legislation over the last few years. There was a new bill introduced here in 2020. We'll see if that goes anywhere, but states need to get on the same page. Just like anything else we ever talk about, sales tax, income tax, states are like 50 different countries. And you have to look at their rules and discuss what the best option is in each of these states. So remote workers, it's been an issue for years, but unfortunately, 2020, on the next slide, COVID-19 really cast a spotlight on this issue. At one point, according to the AICPA, there were 42% of the labor force was working remotely during 2020 due to the pandemic. In the same survey, they noted at the end of the year, 30% of the people who were still working remotely were working in a state that was different than they were working pre-pandemic. So obviously, this is an issue for a lot of businesses and a lot of employees out there. Thankfully, the states realized that this was not something that they were going to trifle with in 2020. About 1/3 of the states provided temporary relief for businesses, essentially saying that the presence of a telecommuting employee in the state and due to COVID-19 would not create nexus in that state for the business. So that really helped out a lot of companies that, otherwise could have had, more filing requirements, more compliance issues in 2020 and this year due to the presence of telecommuting employees. That guidance, you can find a lot of it. I provided a hyperlink in here to the AICPA state tax filing guidance for coronavirus pandemic. They have 2 tables. They're huge files, over 100 pages each, with all the legislation and guidance that the states passed in the last year or so, related to COVID-19. Right up front, the first couple pages, you'll see some of the nexus guidance that states have passed. And, you can see on this list below, much of this nexus relief has ended, or it's going to be ending soon for some companies, for some states. Connecticut, Indiana, PA, South Carolina are just examples that we passed. Indiana is an interesting example because Indiana only provided nexus relief for telecommuters for their corporate income tax. They didn't provide it for their sales and use tax. So it's definitely something you have to look at the guidance closely to see what protections the states were giving you during this time period. Well, unfortunately, I think the operative word with all this was it's temporary, right? This relief is temporary and is going away. So what do businesses have to worry about, and what should they be looking at now on the next slide here. As we're moving, towards the end of 2021 into future years, and remote work is not going away, right? I mean, as Cindy and Lauren were talking about, I think a lot of people have seen the benefits. A lot of companies have seen the benefits of this. So though, if this is something that your business is, considering or you're doing right now, then you really, really need to take a look at what is going on within the shop. Do a risk assessment of your potential liability for remote workers. And all this starts with, a couple of different questions. Where are all my employees physically located and or working? Has this changed since early 2020, especially due to COVID? The AICPA survey from Harris says that about 67% of the people that responded to the survey actually notified their employer of the change. They were working somewhere differently now. So it's very critical that the employer knows where the employees are working for all these different legal purposes that Cindy and Lauren talked about, and also for the tax purposes with withholding and whatnot. Is this something that's a temporary change? I mean, what is your business going to go thinking about moving forward here? Is this the new normal? If it is, then, well, we're going to have to make some different considerations for tax purposes and business filing purposes in these different states. And then once you know where your employees are, where is the business registered for taxes? You've got to kind of match them up. It's kind of what we do for a nexus study, so to speak. We look at where the activity is and we look at where you're registered. So I think, you really need to sit down, take a look at, okay, I have employees in these states. I'm not registered for income tax here. I'm not registered for sales tax. Are we holding the right amount of tax? Are there unemployment filings or withholding filings that we need to do? We really, really need to match this up. And again, like I said earlier, this is that intersection again of HR and the finance function. Your accounting, your tax people really, really need to communicate and work together well to assess this risk. Nobody can work in a vacuum when it comes to this. This is a really important and critical issue that both sides need to, both departments need to work together on. So what, if you're looking at a risk assessment, what are some of the issues you want to deal with here? What questions are you generally going to be asking? And, what's a low risk to a higher risk type answer? Very low risk, obviously, I know where all my employees are. I know where they're located. I know where they're working. Maybe it's not an issue for you. Maybe you're a New York company. All your employees are here in New York. You don't have any plans to do anything differently. So you're good to go. All my employees are working in a state our business is registered in. Great. They're all assigned to the proper location, matching their physical location. Your systems are updated. Your payroll service providers updated. You're all good to go. That's perfect. Perfect world. Never happens, as we know, on the tax side here. So we get into what's more of a medium to high risk answer. Maybe, still, where all your employees are located and working. They're in several states, but they're not assigned to the proper locations. So maybe you're not withholding tax correctly in some states. Maybe there's some filing obligations that aren't being met. More of a medium-based, risk. Then you start getting into the higher risks. I don't know where all my employees are. They're just out there somewhere doing Zooms and VPNing in. They could be anywhere for all I know. I look at their Zoom backgrounds and they could be at the beach or they could be at the North Pole. God only knows, right? And then you couple that with, I'm not aware of the state tax and employment rules where I have employees located. Then you start really, really getting into issues. That's when you really need to reach out to your accountant, reach out to your payroll service provider, and you start getting guidance because the rules are challenging. And Michelle's going to talk about some of these rules regarding employment and sourcing income, especially related to New York State, since we're assuming the bulk of the people here are in or working in New York. She's going to talk about the convenience of the employer rules and some other issues.
Thanks, Tom, for that introduction. And it's great, really to get into what do we have to think about, taking our inventory and where do we stand. So one of the more specific rules that I'll get to first is the convenience of the employer rule. So there are actually 5 states that apply this rule, but we're sort of picking on this one because it's most relevant to us in New York. Generally speaking, the convenience of the employer rule says that there could be a withholding requirement in the employer's home state and also another state unless that employee is working in second state for the convenience of the employer. So the distinction here is it must be because the employer needs them to be there. Otherwise, you're going to get into some possible double withholding requirements. So telecommuting, the reason we're really bringing this up is telecommuting is not for the convenience of the employer. Although it is a nice convenience and we see the benefits of it by probably any of the old rules or the rules that are on board in any of these 5 states, you're going to be subject to tax in home state, let's say it's New York, and then also that second state that the employee is choosing to work remotely from, whether it's from their second home or anywhere else that they're choosing to be. Or if there's a split, same thing, it gets into complications with the withholding and which states. So on the next slide, we have just a few opportunities possibly for maybe an out for this convenience of the employer rule. So the one thing we'll say is for any of these, make sure to have your ducks in a row. Document any places where you're trying to utilize these. So for example, the first one, in the TSB, there are rules that would allow you to establish a bona fide employer office for this employee. Now, without going into the details, there are some hurdles you have to get past in order to do that. So this is sort of where I'm stressing to make sure that you get your ducks in a row and everything's documented for this bona fide employer office so that you don't then get into the double withholding situation. The other situation, which was sort of our medium scenario, medium risk, was if you do have other states that you're in, it's relatively an easy fix to move that employee into the other state. They work from our Florida location now. So now that one is probably a little easier to meet, assuming you have other states that you're registered in. And then the last one is a possibility, but if you're able to document in writing that the employee is not required to come to the New York office, or let's say any of the other states, if you're in these convenience of the employer states, documenting it in writing is a very good thing that they're not required to, nor do they plan to, but I guess I just would like to warn that let's make sure that the facts support the documentation in writing. So you can document it in writing as many times, many ways as you want, but if the facts don't support it, New York State could come to sort of shoot that defense down.
Yeah, Michelle, so there is some way to really get out of New York, basically taking a bigger bite of the apple here than they should, but you really, really have to document that. I mean, you almost have to create like a bona fide office, like you said. It could be a home office, but I mean, it really has to be well documented. I mean, I know there's not a lot of states are fond of New York and these other states who do this, right?
Right. And it's, some of the hurdles you have to jump past. The business really has to look at and say, okay, do we want to list the, for example, listing the employee's number as a bona fide, as an office number? Do we really want to do that? So, and the employee may not like that either, but there's a lot of considerations to possibly trying to get around the rules and making it work for you.
That's correct. They don't make it easy. That's
No,
correct.
they don't. So I got two scenarios just to sort of illustrate where these rules come into play. Our first scenario, we're a New York-based company, no other location, but we do have to go to PA, and we'll say only PA to keep it simple, to provide setup and repair services. So both of these states are convenience in the employer state. In this case, we're actually in good shape because this really is for the convenience of the employer that we're sending our employees to PA to repair this, repair or set up equipment. So in this case, we're in a good spot where we don't have, and let's say to the employees in a good spot where they do not have double withholding requirements here. On the business side, this is a positive because if they were not registered in PA, but or they would be, they actually probably would be for the work in PA, but the withholding requirement is where we're trying to allocate our days to New York and Pennsylvania appropriately instead to avoid the double taxation. So that is the first scenario. Next scenario, now we're getting outside of the employer's convenience. So this is probably not uncommon these days. So we've got our New York-based company, and they are going to be telecommuting from their second home in Myrtle Beach. For our case, we're going to assume that they're going to be there relatively long-term, maybe for the full year. We don't have any other employees that are based, or all the other employees are based out of New York. We don't have any other issues in other states. But in this case, they do have to withhold for New York and South Carolina. South Carolina is really only allowing employees to work between 2 and 14 days. So for our remote work situations, when the states have these small time frames, they're probably not helping very much to get out of the double taxation. So really the only, let's say, possible, positive side to this is we have this taxpayer who now has, they're living in South Carolina for the whole year. They will be taxed twice. They have their withholding, but they might receive, they may receive a credit for taxes paid to New York on their South Carolina resident income tax return. The only trick here is with the credit for taxes paid, you don't always get the full benefit depending on different state tax rates. So it's still something that helps, but you might not get all that you want out of it. And a few other payroll considerations. So we kind of mentioned, physical presence, and that's where we say generally physical presence means you're there. So in this case, there are a few different tests. So as we mentioned with South Carolina, they have the rule of, let's see, it was 2 to 14 days. We have other states where, like New York, where it's day 1. So days in the state is very important for these remote situations, especially when it comes to part-timers. So if the person's going to be in another state for the whole year, I think it's probably easier to figure out what to do. But if you have people that are going to be in there part-time, or changes in situations where someone who was not going out of state but has to go for a certain number of days, that might be the test in these states we have to look at. The other threshold that we might hit is a dollar threshold. Now, I will say some of the states have a pretty low dollar threshold. You would, as with all of these situations, you have to find your facts, which states are you in, and let's look at the thresholds. But I will say that the threshold, some of them we've looked at in the past, have been, pretty low, in, less 1,000 or less. It could be even lower than that. but I guess the last point on this withholding is there's a lot of resources out there that will give you what state and how many days or what the threshold is, but there are even some states that are blurred further than that, and they do not give specific guidance on what you should be doing. So that would really be on a case-by-case basis and where you feel like your risk is and how comfortable you are with what exactly you're doing right now. Sort of to add to that is, so we're talking about withholding on payroll, but now let's think a little further. For that payroll, also consider regular wages, of course, that probably could just be easily allocated by days. Okay, so that's not a problem. I was in Pennsylvania on this day, so the wages would be allocated on that day. But there are other items such as deferred compensation and bonuses. How are those calculated and what are those based on? You might need to take a second look at those as you're into other states or going into other states, and make sure that you're aware of maybe extra work that you need to do on the payroll side. Okay. Another consideration, possibly, let's say unemployment, the rates and the dollars here don't always translate as much to income tax withholding and all these, but it's still a consideration because for unemployment, they're not looking for double taxation of unemployment insurance. So really, we have some tests to look at to figure out what state do they really belong in, and then that's the state they end up in. It's not like our other convenience of the employer rules where their wages are taxed for income taxes in 2 different states. In order of importance, the localization is really sort of the first test. If you can, as you go along these tests, if you go to the first test and if there's a clear answer, that's where you will that's where you would assign your employee for unemployment taxes. If the first step of localization is unclear, you would then move to the base of operations, or so does the employee work from a base to perform their tasks? So where are they performing their tasks? So as we go down the list, localization really, so the one thing I just wanted to point out is to determine that you're not transitory, it's 12 months. So again, our remote people who go to their second home and are gonna work from there, it's probably not an issue. There's more work involved when you have part-timers who are working partly from New York and partly from any other state. So we have to look at where are they? Are they transitory? Are they moving around? Where are they doing their work from? And then as we move down, who's directing them and controlling them? And then lastly, residency can be the last test. So these are all something to look at because this does not necessarily have the same answer as income tax withholding for the states. So Tom is going to go through a few other considerations and sort of wrap up the tax side of all of this.
Yeah, thanks, Michelle. And I know we're past time, everyone. If you could stick with us for a couple minutes so we can finish up the last couple of slides, and we'll get you out of here shortly. It is, complicated. The one thing with that employment tax too, Michelle, is, when you're dealing with income tax, you're dealing with sales tax withholding, that's with the Department of Revenue or the state taxing authority. Unemployment is typically Department of Labor or some labor board or commission. So you're dealing with a separate agency whose filing requirements and forms and guidance are a little bit more complicated and different. And depending on the type of company you have or business, how you file and what you're required to submit are going to be different. It's challenging. We've done those types of registrations for clients before, and it is really no fun once you start dealing with unemployment and whatnot. Just 2 other points I want to make on on this. Reciprocal agreements. Essentially, what these are, they allow residents of one state to work in another state without having taxes from that state withheld from their pay. So you're not getting into a situation where you have to withhold income tax in 2 different jurisdictions. You don't have to file a non-resident income tax return then. As long as you're following the rules, you're submitting the proper documentation to the state for that exemption, that works. Doesn't work in a lot of states. There's only 17 states or so that have reciprocal agreements. Midwest, Mid-Atlantic. So think Illinois. You know, Illinois has reciprocal agreements with Wisconsin, Kentucky, Michigan, Ohio, Iowa, the states that border it. You know, Chicago has a lot of people who probably work in, you know, live in Wisconsin, but maybe work in Chicago. And then down Mid-Atlantic area, Virginia, DC, Maryland, West Virginia, PA, New Jersey, Kentucky, those states have a lot of reciprocal agreements with each other as well. You know, a lot of cases people work in the District of Columbia, but live in Washington, live in Virginia, live in Maryland. So there are issues there to protect you in those states. And then the withholding in multiple states, you know, so if you do get into the case where you are filing a non-resident income tax return in another state, you can take that credit and claim a credit for that tax paid on your resident state tax return. This kind of helps you avoid any double taxation on that income. It doesn't work, and you have to look at the rules for specific states and how it works. You kind of sometimes run into issues. What if your resident state doesn't have an income tax? You know, like several states, New Hampshire, Florida, Tennessee, Washington, Texas, don't impose income tax. You're kind of out of luck. And this was a big issue here in 2020. Massachusetts, in the early part of the pandemic, decided that, hey, we're going to tax telecommuters who, as normal, they basically created a convenience of employer rule for a temporary rule saying, if you're a Massachusetts company, you just withhold the Massachusetts tax and treat it that way for anyone who's working outside the state. So about 100,000 people commute every day from New Hampshire to Massachusetts. New Hampshire doesn't impose an income tax. They viewed this as a challenge to their sovereignty as a state, and to, you know, an affront to their residents who now have to pay tax to Massachusetts, even though they're not setting foot in the state. It was a challenge for a number of months. Unfortunately, the Supreme Court denied cert and did not hear this case. So Massachusetts, I believe, made this rule a temporary rule, a final rule as well. So it will continue moving forward. But again, it just shows that Congress needs to step in these situations to really, you know, negotiate and work out these disagreements between the states. Otherwise, workers are going to be getting taxed unfairly in different jurisdictions. So then finally, last slide here, you know, a quick recap, not going to get into it. You know, remote workers, they create this nexus for income tax, sales tax, withholding, and create all these potential filing obligations for companies in other states. Physical presence is key. And I know we're all shifting to economic nexus and for sales tax and whatnot, but physical presence still trumps everything. So if you have an employee in another state, you're going to have issues for tax purposes. You know, it also will affect your apportionment. You know, you're gonna, if you're in a state that has a payroll, you know, 3-factor apportionment where payroll comes into play, that's going to change some of your business apportionment. And then for service-based businesses, you know, depending on whether it's a cost of performance or a market-based sourcing state, you can have issues there as well. If you're a labor-intensive business and the cost of performance is shifting from one state to another, it's got to have tax impact on your business. And then finally, you know, not only do you have these income taxes in these other states, but you have minimum taxes, capital-based tax, you know, franchise-type taxes that aren't based on income. You know, they're based on just these values. You know, some states like Ohio have a gross receipt tax. So does Washington. Those aren't based on net income. They're based on a top-line revenue. So you may have filing requirements in these states, even though, you know, your presence is very small, maybe just that one employee. So lots of stuff to consider. Sorry we ran a little over here. We're gonna hand it back to Carolyn and see if we can wrap this up for you.
Thanks, Tom. Just getting my camera back on here so everyone can see me. There we go. I moved it to the last slide. If anybody needs to jump off for contact information, again, as I mentioned, you know, depending on what state your employees may be sitting in, you might have specific questions, reach out to any of our panelists to get those specific questions answered. Again, I will be sending you a copy of the PowerPoint, a recording of it, so you can listen to it again in case you missed anything, and share it with another colleague in the office that might need this information. I did have one question roll in, so just real quickly, it looks like it's kind of for everybody. What are the consequences of non-compliance? So Tom and Michelle, I'll have you take it from a tax standpoint, and then I'll kick it over to Lauren and Cindy from the HR side.
Go ahead, Michelle.
Yeah, so the tax consequences, there are a few different penalties that you could be subject to. There are penalties for late filing, not filing. There are penalties for underpayment, you know, underpayment of the tax, and then there's always the interest too that is added on to the taxes. So one important thing is if you enter a state and you don't register there, you're adding on that not filing or late filing, where you might have just been able to, you know, have underpayment or an interest added on. But the other really important cost here is everybody's time. So you will have a lot of time invested for your payroll and HR to work on notices, you know, let's say reacting to situations that come to your attention, as opposed to being proactive and possibly planning ahead for where your risk is and getting things lined up. The other cost could be really, once you get into it and you're having to deal with notices or possible audits, now you have to possibly file amended returns and pulling in accountants and possibly your payroll service. So there's a lot from the cost side, not just for the returns, but also your whole team involved.
Yeah, I think this is where, you know, it's great to have people like Cindy and Lauren, because, you know, we said you can have an employee working in a different state and not know about it. So you really need to have that policy and that communication, right? You know, in order to prevent this from happening. So if Cindy, Lauren, you guys have any other thoughts on that? Be great to hear.
Oh, for certain, Tom, you're right. And from an HR standpoint, if you're talking about any type of Department of Labor concern about payment of wages, you're talking an audit, and you're talking then exposing the company to looking at all pay practices, not just perhaps the one that was initially brought to their attention. If someone makes a complaint that they're not receiving the right pay rate or you're not meeting that state's minimum, the Department of Labor can come in and actually look at records back for 6 years, and you can be looking at, you know, infractions for not providing meal periods. You can be looking at infractions for not properly paying overtime. And then you get into a situation where the Department of Labor is going to speak to employees. They're going to ask them you know, did you get a meal break? What did this happen? And you can really be exposing your records to a very broad audit that maybe wasn't necessary. So I think it's very important to know all that up front, so you're doing things the right way right from the beginning, as Michelle said.
Sounds more fun than a tax audit. Don't think I want to deal with that.
No, labor audits are no fun at all. You're looking at someone actually pouring through time records. So, I mean, if you've just got one employee and they've only been working remotely since COVID started, maybe not so bad. But if you've got operations in another state and that opens up all time records for all employees for a much longer length of time, you could be looking at some significant penalties, back pay, and, even additional payments if it's decided that you continue to do it after you knew it was wrong and it was willful.
Okay.
So lots to pay attention to. Not only that, if you're talking about discrimination and not providing proper notices and doing something wrong from a discrimination or harassment standpoint, you can be looking at an EEOC exposure to some type of action or a state division of human rights. So it's important to get these things right.
Yep.
Great. Thank you, everyone. You gave, a lot of information. I'm sure it's really helpful to our listeners. Again, listeners, reach out to them if you have any specific questions or need clarification on anything. Follow us on social media for our next webinar and topic. And we thank you again for joining us today and sticking with us past the hour. Thank you, everyone. Have a great afternoon.
All right. Thanks, everybody.
Thank you.